Buying a house is one of the biggest goals for many people in the US, and your credit score plays a major role in the process. Lenders look at your score to decide if you qualify for a mortgage, how much you can borrow, and what interest rate you'll pay. A higher credit score can save you thousands of dollars over time. But what score do you actually need to buy a home in 2025? This video will explain everything in simple words, from loan types to score ranges, so you know exactly where you stand and how to prepare. In this video, we will talk about what credit score do you need to buy a house in 2025? So before we get started, make sure to hit the like button and also subscribe to our channel. 1. What credit score is generally needed? To buy a house in 2025, most lenders prefer a credit score of 620 or higher. This is considered the minimum for many conventional home loans. However, some government-backed loans may accept lower scores. If your score is 740 or above, you're likely to get the best interest rates in loan terms. A score between 620 and 739 is still okay, but may lead to slightly higher rates or more requirements like larger down payments. The exact score you need depends on the type of mortgage you apply for, your income, your debt, and other financial details. 2. Why credit scores matter in home buying. Your credit score tells lenders how likely you are to repay a loan. A high score shows that you've managed debt responsibly. That makes banks more willing to lend you money and to give you better deals. With a good credit score, you could save tens of thousands of dollars in interest over the life of your loan. You might also qualify for lower monthly payments or smaller closing costs. On the other hand, a low credit score could mean higher interest, stricter terms, or even being denied a loan. That's why knowing and improving your score is so important. 3. FHA loans for lower scores. If your credit score is low, an FHA loan might be a great option. These government-backed loans only require a 580 credit score if you make a 3.5% down payment. If your score is between 500 and 579, you can still qualify with a 10% down payment. FHA loans are designed to help first-time buyers or those with lower credit. They are more flexible, but they do come with extra costs like mortgage insurance. Even though FHA loans allow lower scores, improving your credit before applying can still save you money and give you better long-term results. 4. Conventional loans and their score needs. Conventional loans are offered by private lenders and usually require a credit score of at least 620. These are not backed by the government, so lenders follow stricter credit and income rules. If your score is above 740, you can qualify for the best rates, lowest fees, and smaller down payments. If your score is between 620 and 739, you'll still qualify, but you may pay more in interest. The better your score, the more options you'll have. If you're close to 620, consider improving your score first to make the process easier and more affordable. 5. VA loans for veterans and military. If you're a veteran, active duty service member, or part of the National Guard or Reserves, you may qualify for a VA loan. These loans are backed by the Department of Veterans Affairs and often require no minimum credit score. While the VA doesn't set a credit score requirement, most lenders prefer a score of at least 620. The better your score, the easier it is to get approved. VA loans are a great choice because they don't require a down payment or mortgage insurance. If you're eligible, this can be a powerful way to become a homeowner with fewer costs. 6. USDA loans for rural areas. USDA loans are made for people buying homes in rural and some suburban areas. These loans are backed by the U.S. Department of Agriculture and often require no down payment. Most USDA lenders prefer a credit score of 640 or higher, although it's possible to get approved with a lower score if your income and debt are stable. These loans also come with low interest rates and fees. If you live in or near a qualified area, USDA loans are worth exploring, especially if your credit is good but your savings are limited. 7. How credit score affects mortgage rates. Your credit score doesn't just decide if you can get a loan. It also affects your interest rate. A higher score can save you hundreds of dollars each month and thousands over the life of your mortgage. For example, someone with a 760 credit score might get an interest rate of 6.2%, while someone with a 620 score might be offered 7.8%. That difference adds up fast, especially on a 30-year loan. This is why it pays to raise your credit score before buying a house. Even a small improvement can lead to big savings over time. 8. How to check and monitor your score. Before applying for a mortgage, you should check your credit score and credit report. You can get a free credit report from each of the 3 main bureaus at annualcreditreport.com once a year. Many banks and credit card companies also let you check your score for free. Look for errors, unpaid accounts, or anything that looks strange. Fixing mistakes can help boost your score quickly. Keep monitoring your score as you prepare to buy a home. The more you understand it, the easier it is to improve it and qualify for better loans. 9. How to raise your score before buying. To improve your credit score before applying for a mortgage, start by paying all your bills on time. Even one late payment can hurt your score. Set reminders or automatic payments to help stay on track. Next, lower your credit card balances. Try to keep usage below 30% of your limit, and even lower if possible. Paying off debt shows lenders you manage money well. Finally, don't open or close too many accounts. Keep your old accounts open, avoid applying for new loans, and stay consistent. These small steps can help raise your score in just a few months. 10. Credit is just one part of the process. While credit is important, it's not the only thing lenders look at. They'd also check your income, debt-to-income ratio, job history, and how much money you have saved for a down payment and closing costs. Even if your score is good, a high debt load or unstable income can make it harder to get approved. On the other hand, a lower score might be okay if the rest of your finances are strong. Work on your full financial picture. That way, you'll not only qualify for a mortgage, you'll also feel confident that you can afford your new home. Buying a home in 2025 is possible even if your credit score isn't perfect. But the better your score, the easier and cheaper the process becomes. Most lenders want to see at least a 620 score, though some loan types accept lower. By understanding what scores are needed and taking steps to improve your credit, you'll increase your chances of getting approved and saving money. Start checking your score, pay off debts, and stay consistent with your finances. Your dream of owning a home is within reach, and the right credit score will help you get there faster. What do you think of our video? Let me know in the comment section below. If you enjoyed this video, make sure to hit that like button. Also, subscribe to our channel before you go. Thank you for watching.